Securities is also with us on the show now. Amit, thoughts on the market? We've been range-bound for a very long time now. We've managed to climb above 20-day moving average. Fundamentally, what's the positioning like, and your thoughts on the near term as we head into the budget?
So I think as such, there is no major trigger we should expect from budget, because whatever, a platform is there for infrastructure spending and all. So it is very much likely that from 7.5 lakh crores, it can go closer to, 9.5 or 10 lakh crores in this particular budget. That is very clear. And I think if you look at the last 6-7 months, I think government of India has been able to save almost 45-50,000 crores because of the discounted crude that they are taking from Russia. We are spending 1.997 lakh crores in the PLI benefits to these sectors, and you assume when the crude is little lower now and 50,000 crores around you have saved, ultimately this also will go into the economy. So I think this infra-related story is going to be there as you are moving into the election year. And when you look at from the project tendering perspective from the government, what we saw that 6,500 kilometers of NHAI, orders were, had to be tendered, but actually it happened to be 2,050 kilometers by November, actually, because the commodity prices were higher before. Now, when these commodity prices are lower, I think the pace of tendering will be much higher, execution will be much higher. So these capital goods or road construction companies actually, I think, will have a good time now going ahead.
Okay, all right. Hi, Amit. I'm looking at the banking names, and your top three bets are ICICI Bank, SBI, as well as HDFC Bank. It appears, you could correct me, but I'm just comparing, the current fact sheet with the one that you had given earlier. And it appears the ICICI Bank weightage has fallen a little bit while the other two have increased. Have you reshuffled it a little bit?
So we have increased weight in HDFC Bank of late because we believe there are few triggers which are coming there. Obviously, the stock had not participated when you saw the move more into Axis Bank or some other banks. And I think as and when now on 27 January, you will see another approval for the merger. And then eventually that is going to happen. So what we were thinking that MSCI weight for HDFC Bank is going to be increased. The loan growth actually has been around 20%. In fact, in many banks, if you look at the deposit growth, has been much lower, 9-10%, which is a problem right now because you need a lot of money to fund the credit growth. But in HDFC Bank, it is around 19-20%. So I think that is the cushion this bank has. And from this valuation perspective, I think now it is not that kind of steep because of this much of consolidation. I think when the FI flows will start coming back because dollar is topping out, it is very much possible these kind of banks can start participating once again. So that is where I think we are no more underweight. We are now increasing positions in this bank. And Bank Nifty has been a clear outperformer. If you look at the way Bank Nifty moved from 38,000, 39,000, the last 1 year of consolidation higher band, we saw that Nifty broke out later, but Bank Nifty broke out first. So that gives you a clear signal that going ahead also, you will find a lot of banking opportunities actually going ahead. And the results are very clearly supporting it, the way the profitability has increased in this domain.
Amit, you like something like a Voltas, I believe, right? What is the...
So I think,
just explain that, because it's done poorly, right, for the last some time now, for the past many quarters.
Yeah. So see, when the market is moving into more time correction, consolidation, I think you will find many opportunities in the laggard sectors or stocks. For example, you have seen the technology space has started participating after the recent results. Now, when I look at the consumer discretionary space, we have not seen too much of move actually, barring very, very few pockets. For example, SUVs as a segment has performed. In air conditioners, we saw previously the B2B companies were performing, but original equipment manufacturers like Voltas, they had a tough time because Japanese competition was very high. So they had a market share of almost 25, which declined to 23 something. And that is where the stock declined from 1,300 to almost 800. I think it's a more than around 40% decline in the stock. And if you see the current market share, it is still around 23%. It is one of the highest market share in the AC segment. And because it also gets a project business from Middle East and the crude prices are quite stable around $80-85, that business is also doing good. So my sense is, look, considering this particular correction, it is very much possible that this particular stock can start getting flows eventually. So once you are getting a good valuation in such a stock, which is a market leader, which is there in a segment which has only 6% penetration in India, that is air conditioners. And I think this is what we need to look at now in the market. Ample opportunities where you have a good promoter and you have a stock available at a good price. So I think that is where this market is getting more interesting now.
Amit, very quickly, did you make any changes to your holdings in the large cap tech companies post their numbers, increase in weight or decrease in weight?
So we have reduced some positions in Bajaj Finance of late because obviously there is a increasing competition in this particular domain. The whole consumer cycle is not performing right now. That's a challenge. So they have spoken about from 2 lakh to 4 lakh crores of AUM increase. So I think going with a very high weight may not be very conducive. So this is a part of game in the portfolio management. We need to reduce sometime the weights there, and we have moved into metal space. So it is not at all related with NBFCs, but we believe the China reopening trade also has to be played actually in the portfolios now, because when you see the export and import of China, so exports are not picking up because of this global slowdown. But the imports actually have improved. So look at the numbers in November and December, we have seen the improvement in imports, and that is happening because of this reopening. And now they will focus more on domestic economy. They will give possibly more stimulus into that, and that can drive possibly higher move into the metal, particularly industrial metals. And out of them, we have seen a good move in steel of late, when 7 to 8% kind of move also came in that particular commodity. So Tata Steel, which has a merger happening going ahead with many internal companies like Tinkan and all, which is there and which is good for the company. I think the valuations also are better. It is almost at 5 times price to earning, and I think this is where the value to growth kind of stories are going to be played now in the market, and this is one of them.
Okay, all right. Okay, all right. Amit, we have a good recovery on the Nifty, and we have been in this broad band, 17,750 around 18,150 on the upside for many, many days. If you had to hazard a guess on the Nifty itself, what's your sense? For 2023, will we be higher? Or do you think there's a possibility we see a correction?
So I think definitely you will see the higher levels in Nifty. So that's a different question, that for how long it is going to sustain, because when the global markets are not able to continue their upturn, it is possible that Nifty will see more consolidation possibly. But few things, the dollar is topping out. I think that is where the FII outflows will be reduced. Second, in the last 1 year, Nifty EPS has grown by 17%, and market actually has come up by only 3-4%. So that is where the valuations in Nifty are getting attractive. So it was now 18.5 to 19 times. The last 5-year average is also 18.5 times. So despite market at 18,000 doesn't mean that market is very, very rich. I think market is getting reasonably valued, and that is where the FIs will also look at. And there are many components in Nifty alone where we have seen a lot of opportunities coming up. So HDFC Bank, Reliance, they will be holding 25% of the index now going forward. But you will have 75% weight into many stocks where you have hardly 1.5-1% of weight. I think there are ample opportunities there that you need to look at.
Now, is this the break that we were talking about? I mean, we are at 18,062, which means that even on a closing basis, yesterday's closing basis, the short-term moving average, the 20-day, the market is trading above it now. So 18,063. And it's a sharp spike once we took that level out. It's looking good. 170 points. Is this the break out of this range? We'll get to know. I mean, just very briefly, most of your stocks are stocks which have not done well, which are what you like now. And that's the way to go about it. Voltas, Maruti, a bunch of others. Bajaj Finance, for example. Over short periods in the last 1 year, year and a half, they've kind of underperformed. But broadly, would you think that sort of growth stocks, so-called growth stocks, trading at much higher P multiples as compared to where they were, for example, in say 2019, middle of 2019, when interest rates were pretty similar to where we are now. They have further to go on the downside, gradual derating there. What's your sense?
So, I mean, to some extent, it is happening. I mean, we have seen the higher PE stocks in the market. Whether you look into paints, you look into jewelry, you look into the Fevicol side. So they have not been able to perform that much. For the last 1 year, we have seen they have remained stagnant. Now, obviously, you rightly said, there are many stocks which did not participate. They were so-called value stocks. Now they are coming back. So, for example, look at capital goods. Though you have seen a good move in ABB or Siemens kind of stocks, but when you look at valuation-wise, L&T is still much reasonably valued. And we have increased our weight in the stock now, because we believe that going forward, this capital expenditure cycle from the government, this is not going to stop. The extra money that they have been able to, their expenditure has reduced just because of this deal with Russia. Then they are taking the discounted gas, and this money will go into economy. Their taxes are improving. Tax to GDP in India actually has improved. From the month of October, more than 10 crore corporates, it is mandatory now that they have to do the digital invoicing. Just 2 years back, it was more than 500 crore turnover corporates. So this is where more and more people are coming into this, ambit of taxes, which is now, coming into the economy. So L&T kind of stocks, which now are selling the non-core assets continuously, where working capital to, sales has been declining from 24% to 20%. And this is a beneficiary of defense. This is a beneficiary of space. This is a beneficiary of the Middle East orders actually going ahead. So I think that is why the reason is at 18,600-700, you are already, down by 1,000 points, close to that. But L&T has again gone back to the same level where it was actually at those levels. So I think that is where in capital goods also opportunities are there. In consumer discretionary, we like auto. Now we like Maruti over there because SUV as a segment which was missing, it is coming back. Already two, SUVs they have declared in the recent Auto Expo. They have shown actually a 5-door SUVs also in India, which is going to be another game changer actually going forward, a new thing to our markets. So I think this is where Maruti now is gearing up. In terms of margins, another 3-4% of margin expansion, I think, is going to be seen along with the market share recovery. So these are the kicks in few value stocks, I think, which is coming up now. And these are market leaders. And I think that is where you need to start increasing the weights in the portfolio. And we have done it in our ACE equity portfolio.
Great conversation. Amit, thank you very much for joining in. Need to get into a break. As we do that, here is an important piece of information for all our viewers. Don't miss out on the 19 must